Soon enough, artificial intelligence will be part of our everyday lives. Market experts say artificial intelligence will lead the next wave of economic growth and productivity for at least the next couple of decades. But many AI stocks have earned a cautious outlook from Wall Street. Just look at Nvidia, Advanced Micro Devices, or Tesla. To find the best investing opportunities in artificial intelligence right now, I looked at about a dozen stocks with strong buy or moderate buy consensus ratings from Wall Street. After further research, I ended up with two potential stocks. So let's take a look. First up is Alphabet Inc., or Google. As calculated by research firm Quid, Alphabet has made the most AI purchases out of any tech firm. Alphabet has made 20 acquisitions, including predictive analytics platform Kaggle in the first quarter of 2017. Google's CEO has spoken about Google's AI first future. At Google's developer conference, he showed the Google Lens, which is a camera that can recognize what it sees, and AutoML. AutoML uses neural networks to build better neural networks, essentially creating an artificial intelligence that can create itself. Google is rife with buy ratings and very few sell or hold ratings. So let's take a look at the chart. We're looking at the 20-year monthly chart on Alphabet Inc. with the symbol is GOOG. This is a Class C capital stock. I like to take a look at this as opposed to the symbol GOOGL. Looking here at the chart, we can see that the top was in mid 2018 and it corrected down here to this point in late 2018, has a rebound since then up to this point here, and the close is 1121. Let's move down to the MAC. If I'm correct in my previous videos about the current state of the market, I'm looking for a bottoming here in this area with the market, which would mean a bottoming process for Google in that area there as well. Similar to what happened in 2015 moving into 2016. And again, moving on here to the histogram, if I'm correct, then that means Google is bottoming now here. Somewhat similar to the bottom there, not quite as low as it came down in 2009 at that point there. Moving in here to the price rate of change, again, this looks very similar to the 2015-2016 timeframe, and really not all that unlike here in early 2017. I don't think we're going down as deep as 2009. That remains to be seen, but right now I'm working off of the thesis that stocks are going to be bottoming here soon, and I say that in part because a lot of the oscillators have shown strength, such as here, the price rate change, we're above the zero line. Moving on down here, another RSI. This oscillator also shows that we're relatively strong here, that we're near the 50 line, but we haven't gone much lower than that. Same thing back in 2015. Here in 2008, 2009, it was a little bit lower. Still, comparison to other stocks, that was relatively strong. So I think the current level is also going to be relatively strong. And if I'm right, we're going to be recovering in not too long of a time frame. Moving here into the stochastics, same thing. Looks like it wants to set a bottom there, in my humble opinion. Somewhat similar to this, but in fact, I think the stochastics is showing a little bit better of a bottom with a rounding here as opposed to this V bottom and recovery. Into the volume, can't really say too much about that. Volume has been declining, but for several years. I think that's as much a function of the price of the stock as it is anything else. So I'm not too concerned about that. Here in the Williams, again, looks to me that we might be showing a bottom here with this bounce off of this negative 80 line moving up to the negative 50 or midline. not unlike this down here. Certainly not as deep as we were here, and not even as deep as we were in 2010. So, for my money, it looks like there's a possibility that Google could be bottoming here relatively soon. But as usual, please check your fundamentals. All right, let's move to the next stock. And then there's Baidu, and the symbol is BIDU. Chinese internet company Baidu Inc. is the Google of China and has been investing heavily in AI. It thinks artificial intelligence can give it an edge over local rivals Tencent Holdings and Alibaba Group Holdings. Baidu spent $2.9 billion on R&D in just 2.5 years, with most of this going on in AI. The money has funded a 1,700-member research team and 4 separate research labs. Crucially, Baidu has an AI advantage because of the huge data it gains from 665 million monthly search engine users. So let's take a look at the chart for Baidu. We're looking at the monthly chart for Baidu that goes back to 2005. Now, I've talked about Baidu in the past when it was correcting. Well, I think it's near the bottom of its channel. And again, the symbol for Baidu is BIDU. And for disclosure purposes, which I didn't say anything with regard to Google, but I don't hold any Google shares and I don't hold any Baidu shares either. So looking at the chart, we had that top there with the bottom here and a recovery up to the $170.25 per share range. Now, I like Baidu for a number of reasons, but primarily I like this cycle. This is a very good cycle with its nice, somewhat predictable upward and downward movement, somewhat cyclical. Looking here at the MACD, you can see the same thing. The fast line is still has a big difference between the slow line here, but I think that's going to change relatively soon. And you can see that here in the histogram where it seems to be changing right now. Now this correction is about as deep as it was back in, say, 2015 leading into 2016. And of course, not as good as it was back in 2009, but it wasn't a big stock at that point in time. But it has become a monster. Looking at the price rate of change, again, I think the sawtoothing is just beginning here, not unlike this time frame here or this time frame here. So we do have some time before it bottoms, but right now would be the time to start looking at it. Here in the RSI, same sort of circumstances. It's come down that far, about as far as it did there in 2015. And we do have a downward trend here and somewhat of a downward trend there. But I don't think that that's really all that crucial. Looking here at the stochastic, it looks like the fast line is just starting to bend, and it looks like it wants to base here relatively soon. Not unlike it did back at this. We did have a fake out at that point. It did reflect off and came down, but we're down in this oversold territory. We can watch out for another fake out, but I don't think we're going to get one. I think we're going to get a formation somewhat similar back to 2009. Moving down here into the volume, and the volume is not going to really tell us much about that either. But the Williams is going to give us an idea. It did hit bottom here in late 2018 with a small reflection recovery on up. We do have a small sawtooth here going on, but not unlike we've seen in times past there or in this time frame here. So moving back up to the price chart, definitely it looks like it has a nice cycle. So just watch those oscillators because I think it is somewhat predictable. But as usual, watch your fundamentals as well. So for today, that's ChewDog Charts. Thank you.